Hello, everybody. So, thanks for joining us. Today, I'm talking with Baylee, and we're talking about the Japanese equity market, which is up to a record level highs not seen since 1989, if you can believe it. And if you look at the stock market performance so far this year, equity markets in Japan are up comfortably over 20%, whilst global equity markets are up just over 10%. So, Bailey, when we were talking about this earlier, you mentioned that there are two key reasons driving that performance. One being mild inflation, the other being structural reforms. So, can you tell us a bit about inflation?
Sure, we've had 3 decades of low inflation, even deflation in Japan. So that mild inflation is very welcome. Deflation, that leads companies and consumers to delay investment or put off purchases because why would you buy something today if it's going to be cheaper tomorrow? But that's not really the case anymore.
Okay, well, that makes perfect sense. Bit of inflation spurs people on to go spending, spurs companies on to start investing. All good news for a stock market. The second one, though, structural reforms. You mentioned to me that's actually the key driver, the big daddy of reasons behind why stock markets are performing well. Can you tell us a bit more about that?
That is the bigger part here. For a long time, companies have operated with little consideration for their shareholders. That resulted in inefficiencies, poor capital allocation, but now the Tokyo Stock Exchange are trying to do something about it. So they've created a new index called the Prime Index, which selects companies by their higher returns on equity and their shareholder engagements. And as companies are effectively competing for inclusion in that index, it's lifting up a large portion of the market. The goal overall is to produce a market which more closely resembles other developed markets like the US.
Interesting stuff. Okay, so now I need to ask you this question. It's a bit unfair, but you need to get your crystal ball out for this one. Do you think that the Japanese equity market can continue to outperform global equities? Because they've already performed very well so far. Is there potential for more mileage in the tank?
I mean, it's a great point that global investors have definitely taken notice of Japanese equities this year, but it's entirely possible that the current upsurge could run out of steam. But we believe that the push from the Tokyo Stock Exchange is a good thing, and it may help to keep returns relatively strong for a while longer. So, more recently, the Tokyo Stock Exchange have released an update on corporate governance reforms in Japan, and 31% of prime and 14% of the standard index have either disclosed measures or are currently considering measures to make those kind of improvements for cost of capital and valuation. So the majority of companies are yet to respond to requests. We see that as encouraging. It gives indication of that remaining potential upside, but some people could see that as a disappointing lack of response.
An interesting time, regardless, is to be a Japanese equity at the moment, a Japanese company. Look, really interesting stuff. Bailey, thanks so much for your time today. And of course, thank you everyone for watching, and we'll be back again next week with another episode.